Hi everybody and welcome back to the channel again today. So what we're going to do is just have a quick talk about a topic that affects almost everybody in the UK, and it's one of them horrible things that we all hate, which is interest rates. So what we're going to basically talk about is that exactly what are interest rates and why do they matter so much to people up and down the country. So what we're going to do is just break it down. So at the end of the day, the first thing you've got to work out, what are interest rates? So simply put, interest rates are just basically the cost of borrowing money. So when you take out a loan, like a mortgage or to get a car, take out a loan for a car, or anything like that, okay, you pay interest on the money you borrow. So similarly, when you save money in a bank account, you earn interest on your savings. Okay, so how do interest rates really affect us? So when it comes to mortgage costs, okay, so rising rates. So if interest rates rise, okay, unfortunately, your monthly mortgage payments are going to increase. But on the other hand, if the interest rates obviously fall, which they are alleged to fall today from, I think interest rates are they're either at 4 or 5%, okay, your monthly payments are going to decrease, which I'm sure would make everybody in the UK happy if interest rates are due to fall today. Okay, so secondly, when it comes to savings accounts or, most bank accounts, raising rates or higher rates can mean better returns on your savings, which means you're going to make more interest and have more money going into your bank account, whether it's an ISA, a normal current account, or different types of savings accounts you can get. Where obviously falling rates, okay, are going to reduce the amount of interest and you're going to make less money. And the banks are going to be a bit tight-fisted and they're going to hand over less money to you at the end of the day, which means you're going to have less money in your bank account. However, your interest is collated, whether it's on an annual basis, monthly, quarterly, whatever it is, you're going to have less money in your bank account, which is never going to make any of us happy because we all like to have a nice big chunk of cash in our bank every month. Okay, now the next one is one that my wife moans at me on a regular basis, which is to do with loans and credit cards, because she does have credit cards. So rising rates, so interest rates on loans and credit cards tend to rise with the base rate, making borrowing more expensive the higher it goes. That's why obviously if you have credit card with a high interest rate, with the likes of Aqua and Vanquis and all of those, which generally do have high interest rates, you end up paying a heck of a lot of money back. Where obviously if it's a lower interest rate credit card, or if the interest rates fall down, okay, works in exactly the opposite direction. The cost of your borrowing at the end of the day, you're going to pay a lot less money back, which means you're going to keep more money in your normal bank account, which it's going to make you better off, and you're going to have more money to spend on your luxuries at the end of the day, or you're going to be able to pay more money off to getting that credit card paid off or getting that loan off. You can chuck more money at it because you're going to have more money available at the end of the day. Now the last one, okay, is one which has affected the UK and is something that the American election recently was fought over, which is inflation. Now, rising interest rates do affect inflation, increases inflation at the end of the day. So central banks will often raise interest rates to try and combat inflation at the end of the day. which obviously isn't good because, everything, if inflation goes up, everything goes up, That's one of the problems when we've had the cost of living, vegetables, meats, petrol, the whole lot, everything in the UK will basically go up. Anything that you're going to end up paying for, if inflation goes up, that goes up. Now, if inflation falls, it means interest rates can fall down as well, which makes everything, is supposed to, allegedly, make everything cheaper. It's not a case, but that's how it works because, businesses like to make money at the end of the day, as they always have done. So, but as a general rule of thumb, if interest rates come down, inflation comes down, should make everything a lot cheaper, And like I just said, it hasn't really worked out this year, but, a lot of things are coming down. Are our energy prices coming down? Has petrol really come down a lot? Inflation's come down an awful lot over the last, 18 months or so. It's come down considerably. And obviously, like I said, interest rates are due to be decreased by the Bank of England today. So, brings me on to the next thing. So, who is it that actually sets interest rates in the UK? So, the Bank of England, which is an independent body, got made independent under the last Labour government by Tony. So, who is it that actually sets out the interest rates in the UK? So, the Bank of England's Monetary Policy Committee, which is a nice long name, also known as the MPC, is responsible for setting out the interest rates in the UK, basically to make sure that we can make as much money as possible on our in our bank accounts and everything, and basically to keep inflation as low as possible. So at the end of the day, the aim is to balance the economic growth with keeping stable prices. So the number one thing is, how can you prepare for interest rate changes? So obviously, it's always wise to review your finances on a regular basis. Me personally, I normally do it every single month. I assess my, financial situation, including income, expenses, and debts. So I know I've always got a clear bit of cash to be able to cover everything. So in case, let's say, for instance, interest rates do go up, if, say, for instance, my phone bill's going to go up or my food bill's going to go up, I know I've got enough money, so I'm not going to be in too much trouble, and I don't have to worry about anything. Okay, next thing, always consider fixed rate deals. Now, there's two ways to look at it. With a fixed rate deal, whether it's a mortgage or loan, okay, if interest rates go up, you do not have to worry about paying more money. Okay, so that's one way to look at it. The negative way to look at it is if they go down, you're not going to be saving any more money. So your mate next door, who's not on a fixed rate deal, could face paying less money. But obviously the other flip side, if it goes up, he's going to be paying more money than you. So at the end of the day, it's going to swing in roundabouts. Next thing is always budget wisely. Leave yourself a nice safety gap so you know that you can cover everything. And if there is something that comes up, for instance, in a rainy day, say for instance, your washing machine or your TV or your fridge freezer, or whatever it is breaks down, you don't have to worry. You've got a nice safety net. You can go out and get it replaced or get it fixed or whatever you need to do at the end of the day. And you don't have to worry, when it comes to like Christmas and birthdays. I have 5 kids. Me and my wife, we start buying in August. So, we're in November now. Christmas is already sorted out. All the food's pretty much sorted out. So for the next 2 months, we don't have to worry. you know, going all the way up to Christmas. So always budget wisely. So understanding how interest rates work is crucial for everybody. So you can make informed financial decisions by staying informed and taking proactive steps so you can navigate the impact of interest rates, whether they're going up or down. So it is important for everybody to understand how they do work. You know, no matter how old you are, you know, whether you're a teenager, you know, just leaving school, coming into the real world and about to start working, because you're going to be paying tax at the end of the day. Or whether you're like my father, you know, 78, 79 years of age, you know, getting your pensions and everything, you still need to know how it all works, you know, so you can manage and get through your life and be able to cope. You know, so I hope this helps you. Okay, if you do have any questions, obviously do leave us a message down below, okay, in the comments, and we do try and respond to every single comment. If you are new to the channel, please do subscribe to the channel, okay, because we do try and put out videos at least, you know, once or twice a week with relevant content. If there is a particular subject you would like us to do something about, obviously put it in the comments below and we'll try and get a video done on that as well. But for now, thanks for listening, and we'll speak to you again a bit later.